Welcoming in right now David Straszewski, CEO, Sound Planning Group. David, thanks for being with us. So the Fed hiked rates. We've had a lot of corporate earnings and a very choppy trade, but a wonderful July for stocks if you were a bull. Now what? How are you feeling about the market?
Well, that's the million-dollar question, isn't it? So there are 5 things that we find that move the markets. We've got inflation, interest rates, corporate earnings, what the Fed's doing about all this, and then geopolitical events. And so right now, it's an interesting thing. You know, if we think about inflation today, if a business has inflated prices, but their margin remains the same, what's interesting is that actually their earnings could look more positive than maybe the total sales and what they're actually doing comparative to previous earnings reports are looking at. So it's difficult for analysts to be really gauging this and understanding this in normal times. We've just got so many different cross currents here. There's just issues in each of these 5 areas. So obviously the big inflation question, is it a dual mandate? I don't know. We'll see. The JOLTS report came out for June, and we know that that there are fewer jobs available. We've got some of this that's coming out here in 3 days, and maybe that says that corporations are pulling back a little bit. They recognize maybe some things are not as sustainable as before. Certainly some of the jobs that they were looking for may be more difficult to find as those get stale, as you know, they continue to pay for marketing and not fill them. But where is the economy today? I'd say the Federal Reserve's interest rate influxes have not actually hit the market. You know, these happen, and we begin to see the ripple effects 12 months, 15 months later. And so where I'm really concerned is in some of these corporations metabolizing their debt. I'm concerned in interest rates for real estate, as we're seeing that begin to slow down right now. And then that would ultimately mean consumer sentiment's not going to be so excited, because each time interest rates raise 1%, that's a 10% increase that we have in need for income in order to buy the same home at the same price. And so 10% free.
Absolutely.
Yeah. So
it's a lot, and it's all adding up without a doubt. And when you're going, I'm sorry to interrupt you, but there's so many great ideas that you're touching on all at the same time. So when it comes to stock picking, I know you have some names for us today. I'm looking forward to talking about those. But when it comes to picking, how are you going about that?
Well, we need to be a little bit more individualized in our thinking today, where we thought sectors or indexes are going to have a better feel to them. I think that we really need to get into the fundamentals on companies. We need to be looking at cash flows today. Liquidity and cash flows, I think, really are the most primary thing as we go forward into the future, and we look at, where a nation's going, where some of these, cycles heading. I was just in Europe, and we were on parity with the euro. That was incredible. How does that work out when, with gold prices essentially staying net even with the U.S. dollar? Well, I'd say the U.S. dollar is getting stronger, and it's maybe making us more challenging to compete on a national or international level. And so I'm, really concerned right now about a lot of corporations, and there's just a lot of factors that are going to come into success or failure. Are we at the bottom? Is this a new bull market now? I personally vote it goes up forever, but don't think that we're at the beginning of a bull market yet. So there's just too much fear, uncertainty, and doubt out there.
Yeah, and let's talk about some of the names that you've chosen to discuss today. I mean, before I get to some of the big tech, which people get super excited about, why a name like Campbell Soup?
Well, we need to have names like this. We're seeing a trend begin to happen. We're also recognizing that there could be some food shortages out there. And so, these organizations become more important, specifically with the supply chains that they've established, over all these years and for all this time frame. And so we think that they're positioned in a good way. It's more sustainable, long-term type of food. And we think that that's actually going to be something that people are trending towards right now.
Right, understood. And then when it comes to big tech, names that have been beaten down, though they've done a little better in July, Apple, Amazon, and Microsoft. Can you give me a thought on each one?
Sure. What I've done is I've gone back to what are the things practically that I'm using, that my family's using, that people are using around. They talk about getting something on Amazon And so when something becomes a common threshold, I mean, my children think that Amazon is like, some magic thing. You just go online and it shows up at your door. They don't understand the amazing stuff that goes on with the supply chain to get it here. But we see that obviously being strong. They're growing. They're doing well. They were able to invest in infrastructure. We may see some of that get challenged with this new corporate tax that's been proposed right now. So I like the fact that they've been building, expanding, and they've got a decade ahead of most others in sort of this online purchase and power. Then we go to Apple, and so I think Apple has become so efficient, and also they have some privacy things that at least that's what they're telling us. That I'm personally interested in as I literally flip my entire team and all of our computers over to Apple computers, given the new M1 chip and how it encrypts things. But the efficiencies, the quality of product, we're certainly cautious about the fact that there could be supply chain issues and challenges coming out of Shanghai or China in general relative to the manufacturing of their products. But they're positioned really well. They got a lot of cash, and we think that they are leaders of the future.
And you had Microsoft, right?
Yeah, big fan of Microsoft here, being the fact that we're in Seattle. It's not just a home team bias. They really have changed the world. And as we have this more work at home environment, their Teams programs and a lot of the services, they're kind of giving Amazon that the online and web service component to run for their money now. And I really like that. LinkedIn is beginning to get some strength again as well. So, that's an important component as we look here into the future.
Right, understood. David Strzewski, always nice to see you. Thank you very, very much. CEO of Sound Planning Group. Good conversation there. Thanks, David.